Have you ever noticed how some stocks seem to move completely against the overall market trend? Almost like they're playing by their own rules? Well, SoFi is one of those names right now, and what we just saw play out is too important to ignore. If you're watching this, you'll want to stick around until the end because I'm going to walk you through the latest data. What's happening with institutional investors, how shorts are positioning themselves, and where SoFi could be heading next week. Trust me, the details here could be the difference between staying one step ahead or being left behind. Now let's jump right in. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert this is not a financial advice video. SoFi had a strong session today. The stock climbed about 2.27%, closing at 25.77 cents after touching a low of 25.77 cents and a high of 26.69 cents during the session. The volume was also impressive. Nearly 59 million shares exchanged hands, not too far off from the average of 63 million. In simple terms, SoFi had a very solid day, even when broader market data came in weaker than expected. Take, for example, the Michigan Consumer Sentiment Index. It landed at 55.4 compared to the forecast of 57. This weaker than expected reading made the broader market a little jittery, but what's interesting is that SoFi didn't really flinch. It held its ground and even pushed higher, showing real resilience. And here's where things get even more exciting: the interest rate landscape. Right now, markets are pricing in a 96.5% probability of a 25 basis point rate cut in the upcoming Fed meeting. Looking further out, the probability of another 25 basis point cut is about 81%, while there's only a slim 3% chance of a larger 50-point cut. So in other words, we're entering a phase where the market is increasingly expecting multiple cuts on the horizon. And you know what that means? Lower rates often create more favorable conditions for financial companies like SoFi. The key point here is that the market doesn't even seem to have fully priced in these cuts yet, which could leave more room for upside momentum as reality sets in. As for company-specific developments, there wasn't any groundbreaking news today. No new SEC filings, no sudden analyst upgrades, but what we did see were a number of bullish articles floating around, which, while not official filings, do help build sentiment. One particular article highlighted institutional investors' growing stake in SoFi, and this caught my attention. Based on the most recent filings, about 52.8% of SoFi's ownership is held by institutions. That's more than half the company, and higher than many investors realize. Why does that matter? Because institutional involvement often brings more stability, credibility, and long-term support. Plus, SoFi has been added to several indexes, which naturally boosts institutional buying, even though it's still waiting on that big S&P 500 inclusion. Now let's talk about short interest. Shorts returned roughly 164,000 shares today, which leaves about 8.4% of the free float currently shorted. That translates into about 99.3 million shares in total. Interestingly, the days to cover ratio has been falling, which is generally a good sign. Once it drops below 1, we might see the short activity start to stabilize. My read is that shorts may eventually settle around the 6% to 7.5% range, which could ease some of the pressure that's been hanging over SoFi for months. Options activity also told a pretty fascinating story. Today we saw $43 million worth of calls traded compared to $8.5 million in puts, leaving net premiums at about $1.6 million in favor of calls. However, about 44% of all options activity was bearish in tone. This likely reflected the broader market's nervousness about that weaker consumer sentiment data earlier in the day. But toward the later hours, optimism seemed to creep back in. Big money seems to be positioning itself for SoFi to climb further next week. Now here's the thing. SoFi didn't quite break its 52-week high today, but it's close. Technically speaking, it looks like a breakout could be right around the corner. Just in the past week, the stock is up 5.61%. Over the past month, it has gained 16%. And if you zoom out over the last 6 months, SoFi is up a staggering 122.73%. That's not slow growth, that's an explosive uptrend. Yet I still hear people say SoFi isn't moving fast enough. Honestly, if you pull up the chart and look at the trajectory, the numbers speak for themselves. Now let's shift to some option-related insights. Next week is quad witching, a period where multiple types of options and futures expire on the same day. Historically, that creates a lot of volatility, and bears are betting that SoFi could fall below $25 heading into it. But here's where things get interesting. The open interest currently shows about 39,000 contracts, translating into nearly 3.9 million shares that market makers may need to cover. That could provide a short-term boost in price. After-hours activity also revealed something noteworthy. There were massive transactions. One was worth over $106 million. Another involved 2.2 million shares valued at more than $59 million. These aren't small retail moves. This is institutional money shifting around. It's tough to say for sure whether these were buys or sells, but given the price action staying steady around $26.55 after those trades, it's reasonable to assume these were buys. We'll likely continue seeing big institutional rebalancing transactions like this in the weeks ahead. Looking deeper into the dark pool data, we didn't spot many transactions over $1 million during regular hours, but there was steady activity all day long, probably around 600 transactions total. That points to institutions, not algorithms, driving most of the volume today, which I actually prefer because it feels more grounded in real buying and selling rather than robotic price games. Technically, SoFi closed at $26.55, right between key resistance levels at R2 and R3. It finally pushed past $25.96, a level we've been tracking for a while, and also cleared $26.50, which now becomes another important level to watch going forward. The next milestone is $27.37, just a hop away from setting a new 52-week high. Based on how the large transactions lined up with price stability, I'd lean toward those being institutional buys. From a chart perspective, things look healthy. The stochastic RSI sits at about 38, which is neutral. That leaves room for momentum to build without being overextended. Meanwhile, profit ratio data shows that 99.57% of all calls are in the money. That's huge. It means almost every call option holder is sitting on gains, which can fuel even more bullish energy. So where does this leave us? Going into next week, we have volatility on the horizon thanks to quad witching, but SoFi is showing real strength. Even when fintech peers traded down today, SoFi shrugged and kept climbing. Institutions are deepening their involvement. Shorts are slowly backing off. Options activity tilts bullish. And technically, the chart is lining up for a potential breakout. Of course, I'm not saying it's guaranteed sunshine from here. Nothing in the market ever is. But the pieces are falling into place for SoFi to continue surprising people. Keep an eye on that 27.37 level, watch how options expire during quad witching, and pay attention to those big institutional moves after hours. The story isn't over, it's just getting more interesting. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.